But let me first go across to Mr. G. Chokkalingam, founder and MD of Economics Research, and we've been putting out cracker stocks for this Diwali. And Mr. Chokkalingam, very good morning to you, and thanks so much for joining in today. Largely, let me first go across and look at, get your view on the market, because what do you actually see as the key level for the Nifty 50 by Samvat 2082? By the end of that, where do you expect the Nifty 50 to go?
At least 15% upside would be there. The only risk factor, by any chance, Mr. Trump becomes extremely aggressive against India in terms of trade war. That's the only risk factor. But I have a strong view that he cannot afford to do that. In terms of global political scenario, he has to ultimately compromise and keep India on par with other Asian countries. So therefore, by next Diwali, I expect 15% return. Since this Diwali we missed any big return or the market as a whole. Next year it is very much possible because domestic demand drivers are very, very strong. And therefore, we should be able to tide over the current global trade war and give a decent return.
It's quite an optimistic target that we have for next year. Hello, Mr. Chokkalingam. This is Anushi joining in as well. First of all, wish you a very happy Diwali and your family as well. With this positive kind of an outlook that you have for Nifty, just want to understand that top sectors that we should be watching out for, your top sectoral bets.
Yeah, thank you for your greetings. I wish NDTV staff and the channel a great success and great happy Diwali. Yes, the sector, obviously, it will be the banking sector because that is the only sector still growing. The business in double digit. I mean, the credit is still growing at 11-12%. So if you take Sensex or Nifty, and there are 5-6 sectors which dominate these benchmark indices, hardly there are many sectors which can give you double-digit growth, and this is the only one. Other industry tailwinds are the interest rate is going to come down substantially. There is no doubt, and GST rate cut will push up aggregate demand in the system. And fourth, the quality of asset still very close to 10-year record best level. Slightly it has gone up, but still we are close to 10-year best level of net NPA for the industry as a whole, and therefore the banking sector would be on the forefront, followed by capital goods, and then automobile sector.
Got that, Mr. Chokkalingam. So in banking, in capital goods as well as automobiles, are those also favoring you for your top 3 stocks that investors need to watch out for till the next Samvat?
I have picked up 3 small and mid cap stocks. Is it fine to present them, or you want
absolutely.
Only those sectors?
No, absolutely, sir. You can present the 3 stocks that you have.
Yeah. So one is Oracle Financial Software Solution. I personally do not own, but I am extraordinarily bullish. I will give you 5 broad reasons why one should consider this stock. If you look at the profile, it is a subsidiary of $57 billion Oracle Corporation, and it is engaged in the product, not in the IT services. And in maintenance alone, it gets a very steady, stable income of 2,000 crore or 30% of the total revenue, where the profit margin is very high. Second, strong balance sheet, cash is around 5,900 crore, extraordinary dividend payment. Last 5-year cumulative dividend itself is 1,120 rupees. Last year dividend was 265 rupees per share. And third, there is no worry about US trade war extending to the technology sector, because its dependence on US is the least among all the technology companies in the country. Almost three-fourths of the revenue comes from outside USA, well diversified, and it commands an operating margin of 43%. Very rare to see even among the technology company listed in India. Finally, the stock price has corrected 33%. So these are the 5 reasons I would recommend strongly. And second stock is Voltamp Transformer. I like this stock a lot. It is engaged in transformer, and there has been a boom in the capital expenditure for a power sector. In fact, this morning also the media says that there has been a record level of hike in the capital expenditure by thermal companies. And second, this transformer company, it caters to a wide range of user industry. It is not heavily dependent on state government, distribution companies. Extremely diversified across various verticals. Strong balance sheet. Last 20 years, it is a debt-free, sitting on a very big cash of, around 1,100 crore. Reputed clientele. This stock is also crashed up by about 50% from 52-week high. So this is the second stock. This also I do not own. Third stock is a Bombay Burmah, which I personally invested. My company also invested in line with the compliance. I like it. I believe that it is a potential multi-bagger. I may be wrong. People should do their own calculations. I believe it's a potential multi-bagger. It is commanding 82% discount to value of investment in Britannia. Most companies are valued on the market on the consolidated basis, but this company is not getting that consolidated basis the valuation, because Britannia is a subsidiary. BBTC has 50.5%. On a consolidated earning basis, the stock is trading at just 12 PE on FY25 earning. And now Britannia is expected to do well because global outlook for wheat is positive. Wheat is a major input for Britannia. The prices are expected to come down. India also, the output is expected to go up and prices expected to come down. Third, post-COVID, the management has cleaned up the balance sheet. After shutting down the Go Air, they cleaned up the balance sheet. They wrote off all the liabilities which arose on account of Go Air investment. Fourth, very important point is that this is more than 150-year-old company. As far as I know, in the last 3 decades, this company has not given a very good dividend to the shareholder. First time, recently, it gave a 2 interim dividend, very good dividend. So I believe post restructuring, there is a possibility of this management giving more and more dividend, and that should help the company to reduce the holding discount. It is commanding holding discount of 82%. So whether you take a holding discount or you take a consolidated EPS, the potential is huge. Lastly, apart from rich investment in Britannia, it has got nearly 4,000 acres of tea plantation in Tamil Nadu. At the border, they all, at the periphery of the towns in Tamil Nadu. So these are all freehold land. So very long-term intrinsic value is also there. This stock is also down by 35% from the 52-week high. As I mentioned, this is among these 3 stocks, this is the only stock we have invested personally in line with the compliance policy.
Okay, thank you so much, Mr. Chokkalingam, for those views and those cracker stocks that you should be watching out for. So, Voltamp Transformers, Oracle Financial Services, along with Bombay Burmah in focus.